Chapter 2 Mutual Fund Basics. Money is your one true friend till your last breath. After that, it does not matter. But till then, look after it. What is a mutual fund? Essentially, a mutual fund is just a pipe that connects your savings to a bunch of securities such as stocks and bonds. Let's stay with stocks first and imagine each stock to be like a bead in a box. There are thousands of beads in the market. You can buy a few beads from the entire box. Some of these beads will turn out to be precious and will double or triple your money. Some will be semi precious stones that will give you a good profit. Some will be just wood or stone and will actually be worth less than what you paid for a bead. Others will turn to sand in some time and your money will be lost. You want to make your savings work harder and want to buy some beads so that you get good return. How will you choose 5 beads out of the multitude of an offer? Can you examine each bead? Do you have the time to evaluate the intrinsic value of the beads? Each of them looks shiny and bright. How will you choose? Suppose you do the needed homework and choose 5 beads and spend 1 lakh rupees, but a year later all of them turns out to be sand. Your 1 lakh falls to nothing. You lose all your money. What if all of them turn out to be precious and your money doubles? What if 2 are precious and 3 are sand? What if pure luck get all 5 beads to be precious? It will be bad luck to all the 5 that were made to be sand. But you won't know till a year later what you had bought. So, how do you take a decision now? What if you could hire an expert to do the beard picking? You pay for his services, including costs of buying and selling to maintain your beard portfolio. But each of that expert will charge a lot, and you might not be able to afford such a person. Good fund managers might cost more than what you earn a year, let alone what you want to invest. But what if investors like you got together, pooled your savings and hired an expert in beads? This expert will have some rules of the game that she must follow, and collectively you will always see that she remains true to the game. You will evaluate her on the performance each after year, and if you find that she does not do her job well and the other group of investors have a better bead picker, you will fire her and rehire someone else who is better. The per person cost of the expert will be small compared to one person hiring the expert for individual bead picking. Then, because some bead picking ran off with investors' money, the government put in place some rules. Now there is a way for you to buy beads collectively with other people using a regulated way that has an oversight of rules and regulations of a marketplace that would not only reduce your cost but also provide safety against fraud and somebody vanishing with your money. The judgment of the expert may also not be 100% right, but because he has a large amount of money, he is able to diversify or expand his bead selection to at least 30-50 beads, up from the 5 you could afford. Even if some beads turns to be sand, the overall loss will be diluted. So, also the overall profit will get diluted as some beads will do well and the others won't. Your risk goes down and you will hold a varied set of beads that should give you an overall good profit. This is a very simplistic way of looking at how the mutual fund industry and the market works. Just replace beads with stocks and bonds, and you will begin to get a mind picture of what the whole story is about. A mutual fund is simply an investment vehicle that you use to buy stocks, bonds, gold, real estate, and a combination of these. A mutual fund scheme collects money from investors, offering to invest it in a certain way that it could just be an equity scheme that wants to invest the money in large caps or mid caps or in pharma stocks or in foreign stocks or ask you for a wall to wall mandate to do whatever the fund manager wants with the aim of generating a good return. It could just be bonds that mature in about 3 months, giving you a very short term product, or bonds that will mature in a year, giving you a slightly longer investment horizon. If you first understand the purpose of mutual fund, it is much easier to comprehend the way the market is set up. It helps you stay wary of the fundamentally flawed arguments such as SIPs give better interest. Mutual funds are market linked products and do not give a guaranteed return or interest, and SIP is not a product but a route, as you will find out later.